Hey traders, I'm Trading Man Dan with the Chart Guys, analyst and educator, and today we had the bears show up in the market finally. We were certainly expecting NASDAQ daily consolidation, but there were aspects of this pullback that definitely are getting my attention, and I'll show you how I trade after I get a signal from a certain direction. So the S&P 500 has daily consolidation underway, the NASDAQ as well. Again, we knew the NASDAQ daily consolidation was due. I thought it was coming on Monday. But it took until today. We had a higher low every day for 6 days in a row. It's been pretty much all bulls for 2 weeks in a row. You got to consolidate. That's the part of trends. It's a normal part of trends. And so we're pulling back today. And I've got no red flags on the NASDAQ. I look at the daily and the weekly. No red flags. We've been going up for a month, straight up for a month, sideways for a month, up for a month. And we still got a clear uptrend with EMA 12 support. Where the red flags came in today was the fact that the rotation stopped. So we know rotation, when you have intersector rotation, you've got QQQ pulling back and XLF going up or XLV going up, and they're taking turns. When you've got intra-sector rotation, that's in the same sector, and you have names like Amazon leading the pullback for the last 2 days, while Microsoft keeps grinding higher. And now today, Microsoft starts its daily consolidation, and Amazon was up over 1.5% at one point today. So that's individual names rotating. But today, we had all major sectors, XLV, XLF, QQQ, hitting the low of the day at the same time. That shows me money leaving the market, and that's not healthy rotation. So that's enough to be an exclamation mark and say, all right, you've got my attention. And I want to highlight a trading style that I use in both directions. And this is probably one of the most common trades that I take in terms of being a little bit less aggressive, but having clear levels to be going off of. And I do it on all time frames. So I'll give you an example on the 2-minute time frame. Essentially, it's if I'm shorting, I am waiting for the bears to give me a reason. So KRE, regional banks, they've been going straight up for the last 2 days. They had a really bullish day yesterday. Trying to get these. I'll just go over the writing here because it's in my way. But pretty much straight up yesterday and then straight up this morning. So all right, we're overextended. We're due for hourly consolidation. I wasn't trying to nail the top. I was not shorting any of this morning move. What I did do was wait until this pullback, and then I said, all right, bears, you've got my attention. That's a big enough pullback where I'm anticipating a lower high is the most likely scenario from here. It was also the first time we lost EMA 12 on the 2-minute time frame. Held it, held it, held it, held it, lost it. I'm scouting the lower high. So there were a few of us in a thread, and whenever Lori and I are looking in the same direction, I have a bit more confidence. So interested in the 2-minute lower high, said that before the bounce even got started. I know I'm scouting that lower high. It ended up being a head and shoulders pattern, but again, all I care about is a big enough drop to create the space for the lower high, knowing that we've got to confirm a 2-minute downtrend, then we got to confirm a 5-minute downtrend if we're going to see this pullback take shape. So Lori shorted DPST with a stop over the high of the day. I shorted KRE with a stop over the high of the day. Filled at 41.91, and so my risk, if I'm giving a little bit of wiggle room, I'm risking maybe 20 cents before I stop out, and the reward was a lot more significant than that. That being said, I didn't stay in the whole trade. I ended up scaling out a little bit. My target was 15-minute EMA 12 support. And so I was out 2/3 by that point. And then I exited the last bit on this bounce because I wanted to go water the garden. And I picked the wrong midday lunch break lull to water the garden because that's when the fireworks took place. I pretty much went to water the garden right here. And then that's when the bears showed up in the market. So I left a little bit on the table, but it was a very worthwhile trade. And again, the lower high. So same thing. Today, we had a big enough pullback in a lot of names where I know tomorrow the trade setup that I'm looking for is hourly lower highs. Bears proved it to me. KRE is one of them. Bears get my attention. Again, same thing. All right, you got my attention. I'm scouting the lower high. ARKK, you've got my attention, bears. I'm scouting the lower high. Tesla, you've got my attention, bears. We've been running straight up. We know daily consolidation is inevitable. Big bearish candle on the daily today, but I'm going to scout an hourly lower high to be the result of the next bounce. So I'm not nailing the top, but I'm waiting for the probabilities to shift in my favor. Anybody that tried to nail the top in Tesla yesterday was wrong, 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 wrong. Tried to nail it this morning, wrong, wrong. Somebody nailed it, congratulations. But if I want the probabilities in my favor, I wait for the prove it. And it's the same in the other direction. I keep going back to the Microsoft swing trade because it's a good example of a lot of different concepts. But Microsoft, I entered the swing trade after the bulls proved it to me. Boom. All right, bulls, you got my attention. I'm looking to enter on the higher low. Exact opposite concept. Daily uptrend confirmed. Bulls didn't look back. Now we've got our daily consolidation finally underway. Can we keep the uptrend? Can we keep EMA 12? How do we respond to first hourly oversold conditions? Here's another lesson. So another trading lesson. I was waiting all afternoon patiently to look for the NASDAQ to hit hourly oversold. QQQ is an hourly oversold back burner for me because it's been so strong over the last month. And so I was waiting on the weakness saying, all right, maybe I'll try some bounces. And I did try an ARKK bounce that I stopped out of. I was playing this inverse head and shoulders attempt. So I enter here. My stop's under the low of the day. When we fail resistance here, I exit a third of that position. I lock in a little bit of profit, and then I stop out of the rest. So that was a losing trade for today. But again, keep those losers real small. Let those winners run. But, so that once I tried that, I said I'm done because I'm waiting for QQQ to hit hourly oversold. Then by the time it hit hourly oversold, there's 80 minutes left in the trading day. The time of the trading day impacts my trading decisions. If I'm looking for an hourly oversold bounce, I know I need at least 2 to 3 candles for that hourly oversold bounce to take place. That's 2 to 3 hours. If there's 80 minutes left in the day and this is a day trade, there's not enough time for that trade to develop. And so that means that my reward is capped. I have less reward than I would normally have because there's less time in the day. And so I decided, nope, there's not enough time in the day for me to try for this hourly oversold bounce, and didn't miss anything because the bounce never really got going. So that's some trading stuff. Back to the charts. I guess we never left them. Back to the analysis. So for me, there are no red flags on the NASDAQ. We're looking for a daily high or low. SPY is giving some red flags. What are the red flags on SPY? Let's go to the futures chart just to have a little bit more data. So again, all major sectors hitting the low at the same time is a red flag, but there's this uptrending resistance line. You never want to break resistance right into consolidation. So we had a weekly bull flag, break resistance right into potentially a weekly inside bar. And so SPY is still a daily uptrend. Anything above this consolidation lows from last week is a higher low, but this is a potential rising wedge. I don't love the support because there's only 2 touches, but I like the resistance. There's 5 touches here. 1, 2, 3, 4, 5. And so I'm watching closely because, again, the main standout for me today is we know NASDAQ consolidation is due. When that happens, do XLF and XLV join or do they hold up? And the answer was they joined. So definitely getting my attention. As far as the debt talks, we're still in the back and forth game. I honestly wish that in an ideal world, we would have had the NASDAQ in a daily stair step with no consolidation. We would have had the deal go through. We would have had a quick spike up, and that would have been an easy short. But that's off the table because the daily consolidation has begun. So it's a less obvious sell the news at this point, but could still be a sell the news. And we'll be keeping an eye on, if we were to see that news come out this week, and if we go through the weekend, it's a holiday weekend, no trading Monday, but pretty much if by Friday market close, there's no deal, the market's going to start getting a little bit more jittery, in my opinion, surrounding that. But if we were to see that deal come out and confirm, if we fail resistance, that's a clear short. If the deal came out tomorrow and QQQ rips 1% real quick but fails to break that high, there's definitely a top fish there. And again, for me, it's just a lot of this is priced in. How much of it is priced in? I don't know, but a lot of it. So I'm not expecting, a deal to go through to be a new catalyst for the market continuation. IWM. So IWM confirmed the weekly uptrend with a bull break of 179.78 resistance. But that's not the kind of daily candle that you want to see on a key resistance break. There are times where I will make exceptions. I will make excuses for the bulls and the bears. If you're dumping and you break a key support and you don't follow through, I can understand. It took a lot to get there. It's not the levels that matter to me. It's how you get to the levels. So you can look at IWM and say, well, IWM is, a fine line because it's definitely a red flag to break resistance and have a candle that looks like this. But the bears need to confirm an hourly downtrend. So in the end of the day, we lost the hourly uptrend, must confirm an hourly downtrend tomorrow. But for example, ARKK. The reason that I didn't chase ARKK yesterday was because by the time we broke weekly resistance of 40.51, we had just gone 8% in 4 days. So it's not surprising to me to break resistance with no follow through because we ended up going 10% plus in 5 days. So bulls were tired by the time they broke that resistance. So I am still keeping an eye out for a potential entry on a daily higher low for ARKK, knowing anything above 37.42 is that higher low. We had growth names have a great start to the morning. Most of them, many of them, confirming hourly bull flags, breaking the highs of yesterday and following through. ARK was one of them, but gave it back. So again, ARK is on the top of my list tomorrow. All right, bears, you got my attention. Scouting an hourly lower high to be the result of the next bounce. So ARKK, KRE, Tesla, all scouting hourly lower highs. And then we'll scout a Tesla daily higher low. We'll scout an ARKK higher low on the daily. We'll scout a KRE. Well, KRE I'm a little bit more cautious now. Definitely been bullish over the last week plus, but keep an eye on that weekly EMA 12 resistance. And just the fact that our last little daily higher low, 38.51, is fairly close by, we don't have as much space to work with. Tesla, I'm way more confident in a daily higher low forming because it's anything above 164. We've got over 10% of space to work with. Semiconductors, daily consolidation continues. No red flags here. We're looking at our retracement size to gauge if this is healthy. And for now, it certainly still is. By tomorrow, the daily EMA 12 support will be catching up to the 382 retracement. So I'll just use that as a guide, saying if daily EMA 12 support is holding, the bulls still have full control. And again, I can do it on the daily time frame as well. If SMH pulls back and loses daily EMA 12, all right, bears, you got my attention. Still scouting a daily higher low, but I will then scout the daily lower high and look to short that lower high. Healthcare, daily lower high set. We need to be watching for that because of the upper wicks the last couple of days. So that new resistance is 132.36, and we're back down testing the low, so potential to continue the daily downtrend if we break 129.56. And again, this was something key for me. Do we see healthcare confirm a daily uptrend while the NASDAQ consolidates? That would be best case scenario for the market bulls. And the answer right now is no. There's a concept in trading dash to trash, and I'm much more familiar with it in crypto, seen it play out a bunch there. But a dash to trash is when you have a bull move where the bulls are leading the way up, and it is the weakest of the weak names that are the last to pump before everything starts pulling back. And today's price action by the end of the day was enough for us to say, maybe that growth rotation and that IWM move, maybe that was a dash to trash. And so we have to be watching closely over the next couple of days to see if that is indeed the case or not. This Thursday, 5 p.m. Eastern, Jungle Funk Joey is going to be putting on a webinar talking about how to determine the most likely scenarios. The last one he put on got rave reviews talking about time frames and trends. And this is going to be a good follow-up, essentially a part 2 to go a little bit deeper in some of the most important major concepts in technical analysis. Check it out. Link in the comments. Is XLF still struggling at weekly EMA 12. So here's weekly EMA 12. 1, 2, 3, 4, 5 of the last 6 weeks we've rejected from that level. Daily consolidation is underway. The bulls must hold 31.84 and break 32.92 if they're going to try and keep shifting this momentum. But this is definitely a big point in favor of Team Bear. If we cannot get over weekly EMA 12, the longer term financial sector bears don't have anything to worry about. And so that's another reason that I have a bit of caution in KRE in the short term, because if XLF is going to reject here and roll back down to the recent lows, KRE is definitely going to be negatively impacted. So I'm watching KRE for an hourly lower high next bounce. Biotech sector, bull break, big drop, lots of space for an hourly lower high to be the result of the next bounce. Bears will have to confirm the hourly downtrend into daily consolidation. CCJ held up well. We did reject from the high of yesterday with a little double top there, but it's a nice clear hourly tightening range. This is the uranium play. Lower high, higher low. This is a good one. I will short to hedge. As I mentioned, I'm in that IRA position from Friday. And I mentioned today on the live stream, this is where I struggle with day trading and swing trading, because my game plan for the CCJ IRA position is I'm either going to stop out, break even, or I'm going to get a monthly bull break of this year-long pattern. But I recognize a very clear resistance rejection. We reject from the high of yesterday by 4 pennies. And I'm just sitting there itching. Like, I know I'm supposed to act right now. We just rejected from resistance. It's very clear. We were extended into resistance. And so I'm itching to sell my swing position, and was reminded that I could always just short it in another account because it's in my IRA. I could short it in my day trading account. And so did that a little bit today, but if this hourly equilibrium breaks bear, I will grab a short position to offset, and potentially more than offset, that swing position. Because if we do see this hourly equilibrium break bear, that's a daily lower high being set into a likely tightening daily range. Dollar, daily higher low set, up at the highs. So bull still in full control. New short-term benchmark level, 102.96. Gold bounced off the low. And so gold is shaking the inverse relationship a bit with the dollar for the first time in the last couple of weeks. And in my opinion, it's because it's now responding to the market weakness, broader market with weakness. So gold bulls trying to get a daily bounce going, and that's giving silver a daily bear flag with no follow through at the moment. And the miners ended up holding support just barely. So keeping an eye out to see if gold can get the daily bounce going, keeping in mind there's a lot of space for a daily lower high. Oil trying to break bull, real tight daily range. We broke one resistance, 73.58. We've got to break 73.81. Then we'll zoom out. The weekly bounce will be underway, and we'll be looking for a weekly lower high, anything under 82.91. And because of that, the energy sector was green today. Big upper wick, but still green. And natural gas still unable to bounce. We're looking at anything above 225.6 as a daily higher low, but we got a lot of space for a lower high. So again, a bear in natural gas, trying to short here, trying to nail the top. It didn't go well. But this is the bear saying, hey, we're here. It's for real. And a bear is going to scout the daily lower high to be the result of the next bounce. Try that strategy out. It's not the strategy for everyone. And you can nail the top. I mean, I nailed the KRE top today by using it just on a shorter term time frame. Same concept, just a shorter term time frame. It gives a clear level to play off of, and it prevents from continuing to prevents from continuing trying to play against the momentum and getting stopped out time and time again. Again, you're not gonna, I'm done talking. Have a great day. Do good things.
The ducks have discovered there's a waterfall in the back.